in all, sterling's got away with it relatively lightly.
So Rob, as Britain headed to the polls on the 23rd of June, the sterling surged to the highest in 2016, and this was mainly because markets were factoring in a Remain vote. However, on the morning of the 24th of June, the sterling had its biggest daily drop ever in history, and it's because the voting was counted as a Leave the European Union. So can you go into a bit more detail on the overall movements of the pound in the past 2 days?
Yeah. Well, I mean, yesterday we had a very quiet day, tentative trading before the results came out last night. Sterling was drifting up towards 2016 highs on cable, touched just about 150 or so, 132.77 versus the euro. Haven't seen that since very early January. But really, from there, as soon as we found out that some of the results that we were coming in expecting to be pro-Remain, namely Sunderland really being the biggest one, cable plummeted. Overall, we saw over 13% drop on cable, down to 132.30, and against the euro, 10% to 120.30. I would say though, although sterling fell faster and further than anything we've seen since the free floating system exchange rate started in early 70s, cable's no worse off than the very worst of the great financial crash between 2008 and 2009. And really, sterling had been fading against the dollar since 2014, really. And sterling euro trading higher than most of 2014. So it's certainly not Armageddon.
And the FTSE 100 has also dropped significantly. So as a Forex broker, how can traders maximise how the markets are going on at the moment and maximise their trades?
Stock markets haven't shown too violent a reaction, some of which has already been recovered. I think really going forward, the opportunities will be linked to contagion risk within the Eurozone. We're expecting that to pop up fairly shortly. Other European nations will have a groundswell of discontent upon which far-right parties will press for referenda. And if the EU is to break up, the dollar and yen would be the obvious safe havens, the yen being the safest, being the furthest away. And really, although Britain's exit from Europe will be slow and smooth, and possibly won't even start until October at the earliest, we still haven't had any reactions from large foreign-owned companies based in the UK and the ongoing effect on the staff that they employ in the UK. But again, I mean, although these announcements will hit sterling initially, change for these companies, I'm talking about the likes of Honda and Nissan, Airbus, they can't be overnight. And if there are more shocks in store, last night taught us that fading hysteria works if executed well.
And these uncertain conditions are definitely the most challenging for traders. So what's your outlook for the pound in recent months?
Well, I think really I feel the lows seen last night could be significant. They could form a bottom for cable and sterling euro in the near to medium term. The reactions just weren't as extreme as predicted. I had seen cable being predicted to be 110, even parity being touted around. And as of pretty recently, the FTSE 100 is only 2% down since yesterday, having recovered most of what it's lost. The Euro stocks really are feeling it worse at 7% down. So all in all, sterling's got away with it relatively lightly. And thinking positively about the UK market, UK gilts haven't shown, or the UK gilt markets haven't shown any flight of capital as of yet. So there's still hope.
Fantastic. Well, Rob, thank you so much for speaking with us and sharing your insights.
No problem. Thanks for having me.
Thank you. Well, that's all for myself and Rob, but if you did like this interview, do like and comment on dukascopy.tv.